we have, people, marketing leaders from different sets of industries today. We have Iswara from Kredivo, who helps us buy a lot of products online, be it on Bukalapak, be it on Ticket, anywhere, pay later. We have Tushar, obviously representing Indonesia's homegrown unicorn. Needs no introduction, Bukalapak. We have Dyah from one of the most young and vibrant travel portals in the region, Ticket. And we've got Irwan joining us from Ralali, which is completely different at the other end of the spectrum, I would say, from a B2B marketplace. The idea was to bring in varied set of perspectives from different sets of industries. And with that, I'll just quickly give you a brief overview of what we're going to be discussing today. Analytics, is probably the most used and, if I may say, abused term of late. Everyone talks about analytics, product analytics, marketing analytics, user analytics, a lot of analytics. But given the theme of user engagement and retention, that's the theme of the conference today, I guess we'll be focusing more on primarily the user analytics bit of it and how do we use analytics to drive engagement and retention. That's the core theme of the panel, right? Ishwar, if I were to start with you, if there's one metric that's considered to be like the North Star metric for your business and, which helps you measure the engagement, healthiness of the business, what would that be and why?
Okay, first of all, I'm beginning to regret sitting on the first place here. Because I get to be the first one to get asked questions.
I'll change the order next time. Don't worry about it.
Okay, in terms of North Star matrix, I think we have a few, right? So for those of you who've never heard about Kredivo, you can think of us as akin to a digital credit card. User downloads our app, they apply for a credit score, for a credit limit inside our app. Once they get approved, they can use the credit limit to buy pretty much everywhere on all our online merchants, like Tokopedia, Bukalapak, Ticket.com, not Ralali, not yet.
We have you, actually.
We do? Oh, damn. Sorry, I missed that.
Need to update.
Yeah. So that's basically Kredivo, right? And for North Star Matrix, there are a couple of things that we actually track every week, every Monday morning. First thing we do, we check all these North Star Matrix. We check about the application rate because we want to know how many users are actually entering our funnels. That's very important to us. We also check our approval numbers. And we also check about not just transaction numbers, but more importantly, I think for us, is a retention number. So if we're talking about a traditional app, I guess a retention number is the rate of how many users are going back to use the app over and over again. Right. With us, we don't really care about the retention rate on the app itself. What we really care about is the retention rate on which the user uses Kredivo to transact more and more. So fun fact, when Kredivo first started, my CEO and my COO, when they made the business plan, they actually thought that there were probably only going to be 2 or 3 transactions per user per year. Right. That number quickly became outdated.
2, 3 in a month now?
Even more.
Wow. Okay.
So that's...
So go ahead.
Okay. And that's one very important matrix for us as well. And obviously the last one is the NPL rate. NPL is non-performing loan. So it's a number of loan that is not paid divided by the numbers of loan, the amount of outstanding loans.
Understood. Would you be able to pick one metric, Tushar?
Yeah, I mean, we really like to keep things simple, right?
Right.
So the main metric that we look at is DAU. We're constantly checking that pretty much hourly, by the minute even, to kind of, we get live updates of what's going on, and then during the day we even know when people are dropping off during the day and what can we do to fix that. So we might just, during the day, if DAU drops, then we'll probably just inject some extra promos or do something else, or maybe do an extra flash deal or something like that. So I mean, at the end of the day, as an e-commerce player, we we need to think about transactions,
Right.
right? But in terms of app engagement, I mean transactions and GMV and everything else. But look, I mean, if we're talking about app engagement, DAU would be the main North Star metric that we look at. And what we do is then after that, we do break it down per product and see what, and make sure that for the users that we're attracting, to grow DAU, how many of them are continuing to transact, and what's the impact on transactions down the line, and making sure that there's a correlation. So that's something that we continuously look at. But I mean, yeah, we really keep it simple. Like, top is DAU, and we look at that, and then if something's wrong there, then we can kind of break it down and go down from there.
And I hope everyone's aware of what DAUs are. In case there are people who don't know what DAUs are, DAU is the daily active users, the number of users who are opening your application on a daily basis. Just a quick follow-up on that. Do you also measure DAU to MAU ratio on top of that?
Yeah, we do. But I mean, like I said, we like to keep it simple.
Right.
We do measure all that stuff. There's a lot of stuff, like, you can get pretty granular.
Lost.
Exactly. I call it analysis paralysis, right? I mean, you can keep analyzing everything, and not to say that you shouldn't look at those numbers. You definitely should. But I think on a daily basis, you just got to pick like 3 or 4 metrics that you really look at and make sure that they're growing. And then if they're not, then you can keep drilling in. Otherwise, you will get lost. So that's the kind of approach that we have.
And do you also sort of monitor the DAU to transactions?
Absolutely, and we do that on like a per product basis actually.
Okay.
So we look at the products that we have, and we start from the top of the funnel, and then so for the top of the funnel, I guess, is the ads that we run, and then right down to the end of people making the transactions for the products. Yeah. Got
it. Understood. And is this like a channel level attribution that you're doing, or a product level attribution? Or both?
It's both, right? So we start from the channels, and then we look at what's happening in the products, right? And how, I mean, if you look at our team structure, right? So the growth tribe, it's pretty much, it's structured into 3 divisions within it. There's like over 150 people in this division.
150 people?
Yeah, almost 150, yeah, something like that.
Wow.
So it consists of the performance marketing, right?
Right.
Performance marketing has their own engineers and marketing technology, but at the same time, the people that are actually building games and the flash deals and stuff are actually sitting right next to them. So that means that they communicate a lot, right? And so that the guys that are running the ads, right, or the people that are running the ads, they communicate a lot with the products, and then the product people know to basically measure everything from the whole funnel, right? So you consider the whole thing. You don't just look at just what's happening on the ads and then you leave it. You need to really consider the whole, the whole lifetime.
Understood.
Yeah, the whole life cycle. Yeah.
Makes sense. Dyah?
Okay, I think little bit different from what actually Bukalapak do. I think Bukalapak is actually more to e-commerce. I think that's the fun part about it.
Yeah.
On the travel side, because I think in a logical way, not everyone's travel every day.
Absolutely.
I wish. I wish. But, and as well as because our product is pretty much niche to the travel, hotel, flights, trains, we have entertainments and activities, but not every day people actually checking on it. So in the first time, I think the important part for us is to measure the activity on the monthly basis, because we're actually looking for frequency on how many people actually travel within a month. And then I think another part is actually how people actually repeat. Are they actually repeated their travel booking through our portal, or actually they just trying one time only? Because I guess for us, we just started. So right. I think right now, the important part is just to make sure that all the users that register to us, at the very least, they actually try our apps, try our website, and then eventually we will actually be able to convert them into using 360 marketing performance solution to make sure that they're actually making a purchase. Yeah.
Understood. So repeat bookings, is that a core metric that you follow, or
yes.
Right now it focuses on first-time users?
Actually, right now we're trying to balance between these two, because at this stage we grew pretty much very fastly.
Right.
And then second part is we also see the attraction from the users that probably not yet convinced to actually using our product, but we're actually pretty sure that I think in the end of the day we might be able to actually convert them with a better kind of probably offer promotion or a product solutions. So I think we're still keeping those engagement part, and I think that's the reason why engagement is actually very important, just to make sure that whenever they actually try, from the first time they try our apps until they actually make a decision, they actually purchasing, we need to make sure they keep updated in terms like what actually happening in our websites and our apps. Yeah.
Makes sense. Irwan?
For us, and RA is quite easy. I think on the daily basis should be, yeah, DAU is very important for us. Knowing that how many people are actually using your apps or logging even to your website and start doing that. And on the other side, on the monthly basis, is because we are serving small and medium enterprises as a business. They definitely have to be repeat purchase. Repeat purchase is really our North Star metrics on the monthly basis. As a business, it's definitely, they have a shopping list. They need to do a purchase every month, maybe every week. I think we do measure that and put that as our North Star metrics. I think it's quite important for us. Otherwise, if we notice something that the business didn't return and purchase in us, then it's going to be a churn, then we need to find out why. I think that's really, really in our North Star metric as a B2B marketplace.
And in your case, the universe is sort of limited as compared to, say, a B2C business, right? And
yep.
So in that scenario, like, do you also measure what's your CAC, cost of acquiring, versus what's the overall number of repeat purchases?
Yeah, definitely. We do have that.
Okay.
Yeah.
And do you is that like a constant focus, or right
Absolutely. Acquiring and making it could be like a different sort of campaign that could result from that analysis. I think for the repeat businesses, sure, we have a different sort of campaign. Another for the new acquisitions, we have a different kind of campaign that targeted them. So we have to really balance those two sides of it.
Understood. Tushar, I'll come back to you. If you were to pick like one, I would say experiment or a growth hack or an insight, which really helped you drive that your metric of, say, DAUs, by a significant percentage, and something which you had not factored in or maybe exceeded expectations per se, what would that be?
I wouldn't think that. So I mean, when you want to grow DAUs, I think, in my opinion, from what we've done, you really want to think of lever shifting stuff, right? Just for example, like just sending an extra bunch of push notifications is probably gonna get you a bunch of extra users, and that's a great optimization. But again, that's an optimization on people that are coming back. What I think works really well is our just overall process of how we work, and that kind of creates an output of pretty good products, which create what I call the next lever, right, of growth, right? And so that means that you continuously experiment, and we actually have a whole, so within the Growth Tribe, we actually have a whole bunch of product groups, and we call them new verticals. And what that means is basically these guys create new products and, kind of risky experiments. So that's how we came up with Serbu Seru. We're the first ones to actually kind of come up with that kind of concept here. We did about 10 different products that didn't really work as well. We had kind of low engagement, and but we kept on learning from those, and they culminated into that great product. And I think that's the kind of approach that we have to really shifting our DAU growth. If you look at our roadmap, what's going to be coming is, and what we kind of bet on, I guess, to really grow our DAU is things like that. Right. But at the same time, the other optimizations are really important too. But if you really want to grow DAUs, then launching products itself. But if you want a concrete example, it'd be Serbu Seru was an awesome product that we launched that really grew DAUs, grew transactions, and new customers, and that was awesome.
Got it. And you manage your, the entire Growth Tribe is about 150 people, like you said.
Yeah, roughly.
How do you get the team to sort of rally behind this, one North Star metric, and how do you drive that culture of constant experimentation in the team?
So actually, that's a good question actually. So when I first started, it was we weren't really kind of working at that pace, or we didn't really have that mindset, because in general, product teams create sprints, and then you still do experiments in regular product teams, but they may not be as risky. They're kind of you do a lot of analysis, and then you spend time, and then you create the specs. But in the growth team, like when we built the World Cup, that was done in 10 days. That's the kind of speed that we're talking about. In terms of how we did that, it's people see the data and the teams themselves. I think the biggest thing that you can do for your team would be to make sure that there's transparency in the data and making sure that you give clear KPIs. So for example, being able to just see the DAU and making sure that everyone has access to that is really important, and that itself is a motivating factor. And then when they can see their results, I mean, our own teams, like we have a weekly catch-up where we see what the wins are, what the losses are on the experiments. And so having that transparency, and everyone sees that, and having the transparency there has, I think, really motivated everyone and driven that.
Makes sense. Yeah, you're in a phase of rapid growth. I'm sure you're doing a lot of experiments, doing a lot of stuff to sort of drive the growth.
Yeah.
Anything specific that you'd like to maybe share with the audience today? What something which changed the curve of growth per se?
Yeah, I think if I can actually mention one thing, that there are two types of growth that we actually like looking right now. One is the regular growth that we actually maintain, but then we also have like kind of like a booster growth. So the regular growth, of course, is a business as usual. You actually do everything in the place with the right framework, using the right KPI and stuff. But I think if I can actually highlight is one thing, the online travel week. Mm-hmm. The online travel week just started, I think, last year, October. We actually did it like one time. And then after we actually see the result, we've seen that the impact to the user is pretty much incremental. So we've seen the double of the user in terms of the transaction, and then even when we actually elaborate that program to the secondary city, we also seen that the enthusiasm from the users is pretty much high as well, because I guess we also have like an opportunity to bring to introduce ourselves to the users. Before, we actually probably much different with the ticket.com in the old days. Right now, we actually want to make sure that we can talk with the user in the same languages, same vibrance. We actually bring like a joy and happiness and stuff. And then after looking to that number, we also seen that then another opportunity to redo it again. And when we did this for the third time, we think that probably the impact will not gonna be as big as we're actually thinking about. But then, surprise, surprise, the impact of probably, I hope everyone's actually get an opportunity to buy something during the OTW period, and the deal is pretty much great, I guess. And then the growth is pretty much tremendous during that week. Yeah.
And was this more of new users coming to purchase, or was this more bookings from the existing set of users?
Yes, I think the composition between the returning user and the new user is surprising the company as well, because the new user that coming is actually higher than the returning users. So we've seen that people actually really want to try our product this time. Yes.
That's a great place to be in.
I know, I hope. Thank you.
And so how did you sort of end up with this idea of, say, online travel weekend? Is this like something you're doing every quarter, or how does it work?
I think we actually did it based on the business goal, I guess, and then based on the business call as well.
Right.
Like last time we did it because we also want to rebrand our product one time, and then we also want to do it on the secondary city. This time because we also seen the opportunity during the seasonal.
Right.
We might gonna do it again probably in the future, but unfortunately we cannot really fill the dates.
Of course.
Yes.
How about you, Irwan? Anything specific? Any particular growth experiment that you'd want to talk about?
The one that we really focus right now, and especially in the last 6 months, is really getting to know your customers. I mean, like as a business, we really need to know that are there restaurants, Indonesian restaurants, Chinese restaurants, because those kind of restaurants has a different kind of needs. Merchandising is different. And also we are serving, not becoming all everything stores anymore. We're trying to be very segmented into small, medium enterprise like car wash, workshops, bengkel in Indonesia, maybe toserba, not warung actually. But so those kind of segment that we focusing, we really need to know who they are actually, and providing them with the best merchandise and try leveraging the marketing team to do so. I think that will help us. We do see a significant increase on that. I think knowing your customer, because absolutely, for a restaurant, we obviously wouldn't offering a needle or something like a hospital. So I think that's, for us, is the strategy that we're focusing right now. I think it's growing pretty well. And definitely will be one of the thing that we focus on the next couple of months. Yeah, getting to know your customers is the key in the B2B, I guess.
Okay, makes sense. And as promised, I'll come to you last, Ishwara. One insight that really helped you drive growth in the last couple of months.
Yeah. So when we first started, it was actually really hard to get people to use Kredivo and make a transaction. For some reason, they had this belief that, oh, this is a scam. This
But you're
is
giving them money.
Yeah, exactly. We're giving them money. I mean, you need to pay us back 30 days after you borrow the money. But the adoption rate was really low. We didn't have you guys back then. We didn't have all. We have funny name merchants who are perhaps 50% of them are not even in business anymore now.
Right.
So it was really hard. But there was this one single customer merchant, which was Sapulsa.com. They're still a merchant of us right now.
Right.
Who constantly have a high frequency transaction with us. And we were puzzled. Why would people need to borrow money to buy Pulsa? I mean, they're only buying 50,000, 100,000. It's not that much of a money.
Yeah.
And then it kind of hit us. We realized that perhaps as a way of them of testing whether this Kredivo company is a scam or not, let's buy a Pulsa.
Small borrowing.
Yeah, small. It's a small amount, 50,000. If I don't get the Pulsa, then so be it. This doesn't work. I'll just uninstall the app. If it works, great. I only need to pay 50,000. No fees, no interest whatsoever.
Right.
So that was our first insight. And then down the line, we realized that we can even make this even easier for user in terms of user experience. So we realized at that time that they're not only buying Pulsa because they want to test whether Kredivo actually works or not. It's because we are quite literally the simplest payment method in the market. So if you want to pay using your credit card, the first time you pay, you need to enter 16-digit credit cards, your CC fee, your address, your name, everything. If you want to pay with BCA ClickPay or any other banking method, it's really hard.
Right.
If you want to pay with ATM, well, good luck with that. If you need Pulsa at 1 a.m. because your girlfriend is breaking up with you, well, you're out of luck.
Right.
So we realized that the payment experience is really, really, really simple. All you need to do is to enter your phone number that you registered with us, your PIN, and then you enter your OTP. That's it. So so after a lot of thoughts, we decided to put this feature, this Pulsa buying feature, into our app. It was not as straightforward as it sounds, because we initially thought that, okay, we don't want to be an e-commerce app. We are more on the fintech side. We don't want user to get confused with our value proposition.
Yeah.
Then we decided to go for it. We experimented with it, and well, lo and behold, perhaps up to 80% of all our users, their first transactions is through this feature.
Okay.
And
isn't that conflicting with some of your merchants who might also be doing Pulsa transactions?
actually, no, because Pulsa, which was our biggest Pulsa seller,
Okay.
they're actually the API provider for the Pulsa purchase inside our app.
Makes
So even though the purchase on Pulsa.com is very low right now, the purchase on our app side is very, very high, and they're more than happy with the current situation.
Makes sense. Yeah, if there's one thing that you'd want to change in the next 3 to 6 months in terms of analytics or driving engagement through analytics within your team or the company, what would that be?
I think, again, we started very late, I think, compared with the others. And I think the growth itself probably just coming like probably 6 or 8 months ago. One thing that I feel like people think that is easy, but it's actually hard, is the user segmentation. People always think like, I think we can actually do the user segmentation, but unfortunately, user segmentation is not as easy as people actually always keep saying, right?
But you already have MoEngage.
I know. That's why.
Subtle plug.
Because I guess the user segmentation, especially for the travel, we want to make sure that we are there when they actually need us. I think this is a very important part.
Right.
And then as well as, because we know that the user already have an intention, then it's also important for us to give like a real like related message to the users. We want gonna like tell the user like, okay, keep buying flight every 2 weeks, like, because it's not relevant for you. If you only like travel probably 6 months, then we need to make sure that when you are travel, we give you like the right price, the right direction, and then probably the right option hotels or probably trains or whatsoever. I guess that's thing that we as a team need to actually learn more. And I think doing more practicing and to understand more through the testing period is actually very important. And I think once you actually able to conclude like 1 or 2 things, it's very important to able to actually scale up.
Makes sense.
Yes.
Start small and experiment faster. Tushar, any change?
Yeah, a lot. I mean, there's always a lot that you want to change. I mean, I think the main thing is making your analytics as actionable as possible, and being able to I think that segments are extremely important. Building teams around being able to create those segments is important. Giving them space to find them and then experiment and see how these segments react to different things is really important. And yeah, I'm quite excited in terms of how we can actually we're building a lot of internal tools to be able to run experiments. We're using MoEngage as well to be able to run a lot of experiments faster and therefore in the sense that get the experiments out faster so that we can get data back and then continue to make decisions faster. I think that's the most critical thing, and yeah.
Act on it faster.
Yeah, exactly. I think that's for us that's big.
Yeah. Ishra?
I guess it's more on the server-to-server integration because currently, as I mentioned before.
That's a very specific one.
Yeah. So as I mentioned before, we always measure our user funnel, right? And our user funnel is measured mainly with the help of a few analytics tools. The problem with that is that the registration part of the user happens in our app, but the transaction part, for the most part, happens outside of our app. It happens inside Bukalapak, it happens inside Ticket.com, it happens inside all the other merchants, including Ralali. Yeah. So sometimes it's really hard to compile all this data into one place. Like we have to query different tables, and sometimes very time-consuming. And well, I guess sometimes in the future we would like to have all this server-to-server integration, have all these reports in one place, all the way from the install to the purchase.
Makes sense. Irwan?
I think combining all the data from the other department, like the operationals, because we do a lot of visit to our customer as well, like restaurants, like Kirana, and putting it up into MoEngage and making them like accessible to all the teams and knowing what's the behaviors. Because if we just track the users that registers and purchase through the apps, it doesn't mean a lot of things to us. It's just like half jobs done.
Yeah.
Half jobs done. Knowing your customers by visiting them or giving them a call or verify them if they are what sort of business are they in, I think that's the real challenge in the next couple of months. Putting all the data together and giving insight and giving them the correct merchandisings, the one that really they really wanted to have a look on it, and also measuring how frequent are they purchase every month and giving them the right promo. I think that's really things that gonna be a huge challenge for us in the next couple of months. I think
A lot of focus on personalization.
A lot of focus on personalizations, I guess, because every business are different. We're not everything stores anymore. Yeah. I think personalization for every business is important.
And I think just to sort of quickly wrap it up, I see we're running out of time. We ran a quick social media contest while we were promoting the event. And I have a question from Jeffrey Anwar. I'm not sure if he's here with us right now. But how do you optimize for diverse data sets without violating data privacy? Essentially, I think the question is more around personalization by data-driven personalization versus the trade-off with data privacy. Any volunteers for this question?
I think the basic way probably to do so, I think one thing that we want to actually keep, I think there are two things. One, something that we can control. The second part is something that we cannot control. I think one thing that we can control probably whenever you just want to make sure that whenever you actually uploaded your information data to the platform, make sure that the platform that you're using are secure enough, and you need to actually check to the partner, are you gonna like using this data and then actually gonna sell it to other people, kind of like basic things questions. And then I guess when you actually, I think one thing that we also try to kind of like balance, for example, when we actually communicate to the user, there are times we're actually using like their names, right. And there are times when we're using like kind of like just like say like hi something. Just want to make sure that if people doesn't like comfortable using like their name on their like advertising platform, for example, the MoEngage part, then we don't gonna use it. Right. Something like that. So just want to make sure they're comfortable with us. That's something that we can control. That the rest that we cannot control, I'm sure I cannot say anything much.
Absolutely. Makes sense. We'll maybe quickly take one or two questions from the audience before we wrap this up. Any questions to the panel? I guess we have one over there. Can we get a mic, please?
Okay, thank you. My question is addressed to Iswara Gozali, head of product of Kredivo. My name is Bara. I'm a product manager from Ahli Jasa Indonesia. I can see that Kredivo is different a product on itself because it's not mainly focusing on the technology as itself. Not really as you are not really selling the app, but you are selling the experience of easy way to get credit, for example. I think that's personally how I see it. But the thing is that when I'm wondering how you as a head of product balance between the metrics of having more user engage or having more user apply for the credit in the Kredivo versus the NPL. Because it seems like the more people engage in the Kredivo, the more people engage with the platform, then the higher the risk it is for Kredivo because more people borrowing money from Kredivo, and then there's this risk of higher chance of having more NPL, non-performing loan on the platform. So as a product manager, how you balance that kind of risk, or which metric do you use more as a North Star on a daily basis? Thank you.
Yeah, I think more of a business question than a product question, but yeah, I'll let you take it.
9 out of 10, always the NPL. What's with the NPL people? So yeah, I mean, naturally, we're a lending business. NPL will always be there. If it's 0%, then it's impossible. There will always be people who couldn't afford to pay us back for some reason, one way or the other, right? Regarding your statement where you said that we don't really, we're more focused heavily on the transaction part. That's actually not true. We invest the same amount and effort on both the client app and the transaction engine. The client app itself serves as a gateway for our users to enter our ecosystem, right? It's where they first interact with us. It's where they register for an account with us, and it's where they get reminder every month about their repayment that is due if they have any payments due, right? So we actually take great care of our app, and when you say how we balance things, well, maybe I can talk a little bit more about our team structure. So our team structure is based on squads. We have a couple of squads inside our product engineering team, and there are specific squads for the transaction engine and the client app side, and even another squad dedicated solely on the approval side. So when you mentioned that, how do we control the NPLs, the NPL numbers? Because the more users that go into our ecosystems, the higher the NPL numbers is going to be. that's a bit of a oversimplification of the problem, I guess. The first thing that I would like to clarify, I guess, is that the approval side is always going to be on our hands. So it really depends on the company's risk appetite, whether they want to increase, if they have a really high target and they don't mind swallowing the NPL, then sure, they can loosen up their approval. But for us, our approval is very, very tight and stringent. In fact, I would probably dare to say that we are the tightest in terms of approval compared to all the other lending fintech in the country.